right, what's up, everybody? It's Cowboy. It is 8:31 AM EST. We got March in the house. March, how are you, bud? Let me see here. So we just had the unemployment claims come out, and they were roughly where in line with estimates, right? So very close to what we thought they would be. Excuse me, 219,000 claims, and just barely above that, just a tick above that on the actual data. So that shouldn't really affect markets too much. Most of the effect you'll probably end up seeing in the Forex markets. So we'll look at the 5-minute chart here. Looks like just a little bit of movement up. Let me take a look. I might want to scalp this on a lower time frame. Let me just take a look at things. No, as much as I want to, not gonna. But yeah, so this is a weekly metric, the unemployment claims. Okay. And so basically, because it's weekly, it's not going to affect price quite as much. What you're looking at here is the 5-minute chart. So this most recent candle that you see is the effect. You had price kind of peak up a little bit here on the euro versus the dollar, which is an indication of dollar initially weak and then dollar getting strong again. And when you have unemployment claims that are in line, generally it just means that there's going to be a little bit of market jitter, and market tends to go back into the direction that it was taking before. Now, right now, market is inching down. I did scalp this and make a nice win overnight. And I do think it's going to continue down. If I don't know that it's going to go all the way down to what I'm going to draw here. So let's go to a cleaner, higher time frame chart here. Okay. Let's go to the 3-hour. So we can talk about where the euro is going to go. I like trading the euro. I know a lot of people don't. It does have a lot of liquidity grabs, so you do have to kind of watch out for that. But this is a clear uptrend, and this uptrend may be exhausted. So this is the result of the CPI and quite frankly the PPI the last few days. So, but the CPI is this wick right here from yesterday, and price has just gone up since then, and it did pull back a little bit. So let's draw the path here, right? Higher lows, higher highs, higher highs, higher lows. And let me clarify this real quick. Okay, so that's our uptrend right here. And given that there was, I guess you could say, a bit of a pullback here, you'll see that I didn't draw this with the arrow, but there's a consolidation right here in price. So at the moment, price may make its way down to about here before it does anything. It may or may not. There are some indications on the algos the price may just want to flip around and go bullish. And if I were to take a look at the Fibonacci's, a couple ways to do this. I would take this pullback here. Where's my here's my toolbox. I left it way over here. If I were to take this pullback right here, then I might actually go from the bottom of that to the top. So the move, this one arrow move up, that impulse up, would be where I would build my Fibonacci here for both the retracement and the extension. And the 618 is going to be sitting right about $1.08. Okay. So that being the case, that's one area where price might stop and turn around. However, usually price is going to grab liquidity. Now, it might not make it down here again. I do have some issues with the algos that say price may just simply catch and keep going. CPI print was pretty strong. So I actually can't enter this trade as it is. I can't short down to any of these targets right now, even though, like, just from a price action standpoint, it's not a bad way to go. If you look back here, price did go ahead and reject off of a prior resistance here, and I did short that overnight and make some money, but I did have some indication that price might be ready to stop going, and it might consolidate here. And just with that lack of volatility, the fact that price is rejecting and then kind of staying still there for a minute, just the algos told me to get out, so I got out. So It looks like it may want to continue down. One algo is actually pinging. You see this red? That's my personal algo telling me the price may go down. However, this candle is not complete. This can flash on and off. So I'd have to go to a lower time frame. But either way, I mean, the move down looks like it may continue, but it's just not within my ability to trade that. I would need something to happen on the 30-minute for me to go ahead and justify that. And that's something I could talk about in the private group as part of the trading formula, but I can't talk about it here because that's just a kind of secret sauce, if you will, right? So we'll cover that in the private. Again, I had to get out before the announcement. I had to take profit on the short before the data came out for unemployment because it wasn't that big of a move today, but last week the unemployment was a very large miss, and the data really moved for really a lot moved. Here it is right here. Last week's unemployment, this big blue candle right here. And this affected all markets. I believe it affected Bitcoin as well. So, okay, good. Well, if you have any questions, I know March is ready to crush it. Let's see here. We got a few minutes yet left. Let's take a look at Bitcoin. Bitcoin following what I drew yesterday and this head and shoulders. It's a bit late now to get into that, but I drew this at the time. It never even pulled back. It just kept going up. Even though I thought it might pull back, it just kept going up. But it might pull back now. You might actually see price pull back from here and grab liquidity. We'll see. It may not need to. It may not. But right now I am leaning bullish. There is that chance this could be invalidated. There is a resistance right here from this, where the this area right here that I'm going to point out with an arrow. If price can make it past here, where price came up and formed the inside of that left shoulder, if it can make it past that resistance, which basically is where it's rejecting right now, right? I mean, it's really right there, almost exactly. If price can push past where that basically this yellow line is, which is the midpoint of the range, then we might see it just head up towards the top of the range. And if the price is bullish enough, then it probably will consolidate and break out. And if it's really bullish enough, it'll go straight through. But there's always that chance the price does dive down to grab some liquidity to the downside. And we can go over to the Kingfisher to see what the liquidity charts look like. We'll do a quick spin to win, see if we can get some free credits. And look, I've actually paid for the Kingfisher in the past. I'm not using it like I used to. I'm not fully using the Kingfisher's capabilities. Just getting liquidity is using like very little of the capabilities of the Kingfisher. But there is a lot of liquidity at 63.5 and more at about 64.4. So 63.5 and 64.4 is where there's liquidity. So right there and right here, more or less. So those yellow lines are where price could pull back to if there's a pullback, merely to grab liquidity, right? And that would take it below the head and shoulders. Now, once you go below that neckline, if price doesn't break above the neckline, which this head and shoulders neckline is this dotted line right here, it's the bottom of the head and shoulders. If price pulls back below that, it is not able to come back above, then the head and shoulders has been invalidated, right? Now, the first head and shoulders target is up here. So a lot of times price will go up to that target and it will reject. And so you'll get an initial target based on this Fibonacci extension. Price goes back down. So we're just, watching this. Right now, it's valid. And if price can even just reject right at the neckline, maybe grab this first bit of liquidity without grabbing the second, which is not likely. Price probably dive down and grab that. But if it can either stay above the neckline or pop back above the neckline, that would give everybody a second chance to grab this long. I think it was Trader XO over on Twitter longed it right at 61, that's a lot of conviction. I say good. That was a ballsy move. But you know what? It's the bottom of the range. And I talked about that 3 days ago. It's like, look, this is the bottom of the range. If you're going to play range plays, this is where you go long. So that is some really good conviction on the range. And you know what? The range traders, they do really well. They're not afraid to take that one loss for every 2 or 3 they can win inside the range. So that said, I think we have covered Bitcoin enough. Diane, oh my gosh, I didn't share the screen. I am so embarrassed. Okay, so after all that talk, let's go over Bitcoin once again. I apologize to the audience. I need more sleep. Okay. So we're going to go over this once more, and then I might have to take our private group another 10 minutes past. All right. That was really fun. I'm glad you all got to listen to me talk for 10 minutes. So freaking stupid. You can see the neckline. This is the head and shoulders, right? Head and shoulders sloping down. You can see the neckline. And the head and shoulders targets, I didn't talk about this yet, not today, but the head and shoulders targets are based on a Fibonacci extension. So the line on which you would draw that would be from the apex of the head straight to the neckline like this, right? And I already have the Fibonacci up, but I'm going to delete it and I'm going to go ahead and draw it again so we can see something new rather than all the stuff I just talked about. And so I would start a little outside of where the apex of that is, move up to where the head touches the neckline. And you can see the 272 right here. That's the first target for this head and shoulders. It has broken out. This pulling back to this area, what I talked about, this is where price might pull back to and give people another chance to grab this trade. But remember, this trade would have to pop back up above the neckline in order for it to be valid. And you can kind of have this neckline go and extend like this. And I'm not a fan of playing this. Once price makes the move up and rejects, the probabilities of these head and shoulders winning are not that great. That's a problem. Okay. So that being the case, I mean, the algos could tell me it's okay to take the trade. I mean, I would trust the algos on that, but it's just not as likely once you have a rejection after breaking the neckline. But it is a possible trade to take. Again, XO going at the long at that 61,000 at the neckline, that's a nice convicted trade. And if we look at what that looks like, I don't know where his stop is. I just kind of saw him talking on Twitter. But I mean, having a stop maybe just below this price structure right here, you're looking at a 6-to-1. Yeah, that's a 6-to-1. That's a beautiful trade, man. And that's if you're a range trader, that's the kind of money you make. And you know what? I mean, that's a 6-to-1. So basically, you can win. You could lose like 4 out of 6 trades and still be profitable with that. That's beautiful. But all that yap about the head and shoulders, you're looking at it right here, right? So there it is. It's just pulling back to here. If the algos say I can go long, I will go long. But once price breaks below that neckline again, some of this might be invalidated, this move up, right? So that's the only issue. I'd have to watch out for that. And these 2 yellow lines are where the liquidity was over on the Kingfisher, right? So that's the picture right now. Right now it does still look pretty bullish. Let me just take a quick peek at the algos. It looks bullish, but right now on the 30-minute, it does want to take a pullback. So yeah, we're looking at just bullish against resistance. So what that usually means in the scenarios like this, when you have price bullish against resistance as per the algo, is that it's gonna head up probably, but it's gonna do so not straight up. It's gonna head up with pullbacks. So that's what we might see. And to look at it level by level, you can see that price did develop some liquidity, kind of like a mini range towards the bottom of this giant range. So something like this. You can see that it did develop something. So it could pull back to grab liquidity there. And then how everything looks, if it does that, and that liquidity is right at the top of where the Kingfisher liquidity is, the top of this liquidity box. It makes a lot of sense for that to be there. And if price does head back down here, how it behaves around this area is going to tell us quite a lot. If it goes back to the bottom of the range, then the algos might flip back to bear. And price might head, possibly down to 56594. But if price goes to bottom of range, and the way, if you're a range trader, this would give you a chance to enter that second range trade again. And again, that's a beautiful trade. You can lose like 2/3 of those and still be in profit because it's like a 5 or 6-to-1. So that's a gorgeous trade if you can grab it. But again, headed to the bottom here, it might break downwards. So, and that, I do get clues on the algos for that. I probably wouldn't short that, at this point in the market. Remember the halving was right here. That blue line there, or teal or whatever, that was the halving. And the halving pullback does usually go for about 8 to 10 weeks. So now it doesn't mean it's going to do that. And there's been other times where it didn't. but like the majority of the halvings, you do have 8 to 10 weeks of price going sideways and slightly down. So it might be that price just kind of consolidates here, goes back down, grabs liquidity in the low kind of 50s. But what we've noticed is a lot of very big names like Wisconsin Pension and a few other large players are getting into the Bitcoin ETFs, which effectively, I believe, makes the ETFs need to purchase more Bitcoin so they can have Bitcoin to, to have as an underlying asset for the onloading of these other large company names, right? So, the demand for Bitcoin is shrinking, or I should say the supply is shrinking. I mean to say demand is rising. And of course, when that happens, price tends to want to go up. So, it's unprecedented times in Bitcoin. But like I said, typically you're looking at about 8 to 10 weeks. So what is this? What would that look like on the chart? Seven times 7. That's 7 weeks. So that's 8 weeks right about here. So this green zone, if you will, that's 8 weeks. And then at 10 weeks would be like up to about here. So mid-June, if not before, early June, mid-June, I am looking at June, right? It might kind of be towards July, but with the bullishness, with everything going on in the market, I think we see a new all-time high probably in June. That's my biggest guess. So, but you know what? I don't worry so much when I'm trading. I don't worry about what's going to happen in 2 weeks or 10 weeks, whatever. That's just for my holds, and I hold through the crypto cycle. I don't even have to think about that. And that's not really a strategy. I mean, it is, but it's not an active strategy. Like buying crypto, 8 months ago when everything was really low, most people are going to make more money doing that than anything else. However, if, I like to take a small percentage of my crypto holdings and put them into trades, in the lower time frame to augment those crypto holdings. I take those winnings and I put them into the holds. And this is just another way to increase my bag. So perfect. All right. Well, again, sorry for not having the screen going. View the Gorilla just in time. Why don't you tell us how you're doing, sir?
I'm doing swimmingly, my good man. Swimmingly. Yes.
Yeah.
Gotta go swimmingly. Yes.
Did you have fun going out in the back and shooting trap?
No, not today. Today I did not do that. What I did is the other day I went outside and I played croquet with Rodney, and I had a dreadful splinter.
Oh no! Was it that your croquet handle, the mallet?
It's always the mallet. You know how it is, especially Rodney and his swings. I use that handle a lot for a lot of things, and I kind of worn it out and got splinters.
It must have been one of those foreign-made mallets. They don't really make them like they used to.
They're American mallets. That's why they don't last long.
No, those mallets were always better when they had the slaves making them, didn't they?
It was good. I remember when Kunta was making mallets for us.
Yeah.
The greatest mallet maker in all of the lands.
Right. When you can beat your factory workers,
those are the good old
starving their families, always, the good old days,
Hopefully the empire will rise again. And,
well, I know all we have to do is spread the lovely, what do they call it? Equity. We keep using words like equity, and the poor people will believe us.
That's right. Like
they're going to think that we care about them with such words.
All kidding aside, I'm enjoying my dark roast from Death Wish Coffee. I'm getting a jolt of caffeine today, so I'm feeling good.
Death Wish. I've never tried them. That's
you are a homo if you haven't tried it.
What's that?
You're a homo if you haven't tried it.
No, I am not a homo, and
yes, you are. You're a Homo sapien.
I'm a homo just for you, bro.
Thanks, man.
Yeah,
appreciate that.
Gay for the gorilla.
That should be a T-shirt.
Gay for the gorilla, dude. That actually should be a T-shirt. Homo for Harambe.
Homo for Harambe.
That's
oh
good.
My god, that's hilarious.
Oh boy.
All right, guys, we're going over to the. We're in the private, aren't we?
Simping for no, we're not yet. Simping for the simian, bro.
Be a simp for the simian. Homo for Harambe, gay for gorilla.
Get us to the private, bro.
Yeah. Listen, you maniacs, you want to hear more of this banter as well as some really good insider information? Join us right now over in the private lab. We're making it happen every single day for $1.66 a day for less than the price of less than the price of a bottle of water. I was going to say a bottle of coffee. Join us or die.
Join us or die.